Okay, so in competitive markets, a lot of buyers are trying to find any small angle they can take to try to get a little bit more purchase power while maintaining their same budget. So I'm going to show you one tool for the trade that you can take to achieve just that. And this switch usually results in maybe a purchase power increase by roughly 2%. So we have a quick hypothetical scenario. I have a first-time home buyer in New England and Massachusetts looking at a $700,000 house. Yes, that's about where first-time home buyers are looking at houses now between 5 and 800 grand. From that standpoint, let's say they're 10% down and they're just trying to be a little bit competitive, get a little bit more, juice out of the lemon, if you will. One switch you can make is changing if you're 10% down and you have a conventional loan and you're paying monthly mortgage insurance, you can squeeze out a little bit of purchase power by just switching to a finance single premium mortgage insurance compared to the monthly. Let's break down the numbers. I'm going to open up now and I'm going to share my screen. Let's go. Let's share this one. Okay. So, taking a peek at it, we have a 10% down, making a monthly mortgage insurance payment. Let's take a look at the payment breakdown. So, 700,000 principal and interest would be about 4,100. Let's go back to summary so you can see the starting point. Again, down payment of 10%, interest rate 6.875. That's just where we're at right now. It's August 8th. APR 30-year fixed, basic, regular closing costs, nothing crazy. So as vanilla as you can get. Going into the breakdown, again, 700,000, 4138 principal and interest. Let's say taxes are 600, insurance 225. Mortgage insurance is just under $100 a month, which isn't that bad for mortgage insurance. This is a very high-end client, high credit score, low debt to income as best as you can get. Total monthly payment just around 5,000. Going over here, switching just to single premium while trying to maintain budget, which budget for me for a client is how much money do you have to spend out of pocket. These clients have about 110,000 to comfortably spend, so staying under 90 is keeping them in a good spot. And then the monthly payment, they want to stay right around 5,000. So how do you get a little bit of extra juice to try to make your offer just a little bit better than the other one? Because that's where I'm seeing a lot of clients win or lose. It's just that little extra 10, 5, 8, you know, not needing to, in all scenarios, go crazy above, but just get a little bit extra out without changing anything about your budget. Going up to 712, let's go to payment breakdown. There is no mortgage insurance. Total payment of, it's just a little bit more than this one. What we're doing with closing costs is we're going to do a single premium mortgage insurance of 4,100 and it's going to get financed into the loan. So that's going to increase the principal and interest payment by just a little bit. So you're seeing that go up, but the net difference is very minimal because that goes away. So the mortgage insurance goes away on a monthly amount and then you just have the one single premium. This is a good option for clients who are probably going to be living in the house for a little bit longer than a year or two, because the single premium, once you pay it, you pay it. It's also a good one for clients that are like, you know what, Mike, we really can't increase our payment much. We don't want to spend too much more out of pocket. As you can see here, it's pretty similar out of pocket. You're going up, let's call it $2,000. Again, ideally, you're not in a position where $2,000 is making and breaking the bank. You need to get that number down a little bit more and maybe look at houses that you could do 5% down, right? So ideally, that's a good comfort swing. Same with the total payment, right? If the swing from 5,058 to 5,064 is breaking your bank, then your total budget needs to come down. But just that small move, we can now give the sellers an extra 12,500, puts you in a good position. From that standpoint, you'll actually pay very similar mortgage insurance and interest over 15 years, right? So they kind of wash to a degree or another. So it's really all about getting that little bit of boost in your bang for your buck there. So that's my quick tip tools for the trade this week. And that's how you can squeeze a little bit more buying power out of your scenario without really changing too much of your budget.